Hello everyone and welcome. So it's only gone and happened. Alibaba, it's only gone and happened. Today we went below $150 per share. This is a 52-week low for the stock. So we've hit that 150 mark, we just dipped below it and it's just recovered a touch today. So at 151 as I record this at the end of the day's trading. So now that that's happened, 52-week low, let's revisit the valuation and we'll see whether it really is on sale, because I think we could be in for a little bargain here. So stay tuned to see my valuation for Alibaba. So here we go. I've got my discounted cash flow template, my finance to JCL template here. And let's just go through and fill in the information to come up with the latest valuation. And I'll just talk you through my methodology and where I'm getting the numbers from as I do it. So first of all, I only like to simulate for these sorts of companies. The fast growing one's 5 years. It's very difficult for me to simulate fast growing companies 10 years ahead. It's less predictable, particularly when they have high growth rates. And 5 years, you normally get analyst expectations and views for those figures. So I like to use 5 years for this one. My ideal situation is that a stock doubles in value within 5 years. So that's a 15% per year compounding growth rate. So that's the discount rate. And then terminal multiple for Alibaba. Well, I think on the optimistic side, you could say 20 if it grows quickly, potentially 15 if it doesn't do so well. So I'm going to go in the middle and go with 17.5. And it's always going to trade to discount to an equivalent American company just due to the sort of inverted commas China factor. You know, whether you agree with that or not, whether you think those risks will materialize or not. Certainly that is how the stocks trade. Today's market cap is 411 billion. So do a bit of a spot check. Can this, if this doubles in 5 years, be worth 800 to 850 billion US dollars? Is that feasible? Is that realistic? I think it is. Today's share price, we said 151 at the moment, and we just need to look at the number of shares outstanding. So what we'll look at is the amounts of cash business will generate by our predictions in the next 5 years, discount each year's value back to today's value, look at the terminal multiple as well, discount that, and then we'll see what that's worth per share in comparison to the current market price. So we need to start in free cash flow figure for Alibaba to start these calculations. I'd like to look at Morningstar with their 10-year history, and that free cash flow figure, noting the different currency, is 172,105. You'll notice I put the exchange rate in here when we started. And we're trading at a trailing PE here of 18 and a forward PE of 30, which is pretty low. Okay, so the key thing now is let's put in our growth rate for the years ahead. Now, the analysts on Yahoo Finance, this is now saying just under 3% for the next 5 years, which is quite a significant change. And you've got this unusual situation where you've got a huge number of analysts, around about 50, and they're effectively all saying buy this stock. I guess, I don't know whether it's my spidey sense is going here, but if every single analyst is saying buy or strong buy effectively, that actually makes me nervous in some senses. Have we missed the boat on this? It just makes me feel a bit strange. I don't know whether that's just me, but yeah, comment below if you get the same. But look, last 5 years, earnings growth 30% a year. Now we're saying 3%. If you look at the sales growth expected for this year, 28%, and then 20%. But 2 to 3% does seem quite low to me. Some alternative analyst views here. 48 here on Simply Wall Street. So I don't know if it's the same 48 or different configuration. They've got for the next 1 to 3 years 15% per year. So we've got a bit of a mismatch between those figures. So I think we could perhaps start with 15% and maybe we just start tapering it down each year. Something along those lines. I don't think that's an unreasonable expectation around their growth rate. 15, 13, 11, 9, 7. That doesn't seem too crazy to me. So where does this leave us? So that leaves us with an intrinsic value per share of $200. So that's saying if the stock was at $200 today, you should be able to double your money within 5 years, so the 15% year return. That's a discount from fair value of 24%. Now, a lot of people don't use a discount rate of 15%, but this growth does seem low. We're looking at 15% here, and you think, yeah, do you know what? If it grows at 15% a year for the next 5 years, terminal multiple could well be 20. That's a discount of 41%. It's not quite 50% that I thought it would be. There's a decent argument to say Alibaba is trading at a 41% discount to get a 15% a year return. But look, even that actually, even that could be considered conservative. Look at the sales growth, even for the next quarter. You look at these numbers here. Next year, 29%. 2023, 20%. So why don't you could go here 23%, 20%, 15, 15, 15. That doesn't seem overly outrageous. 47% discount to fair value. So if you believe some of these numbers, and depends what numbers you look at, you get a different answer. You're getting some quite decent numbers there. And if we have a look here at the earnings consensus, they beat. There's a beat, a very narrow miss, a beat. So they have been beating. Look at the growth on this chart here. 15%. A lot of people are aiming for 10% per year growth, which is a decent amount. 56% discount to fair value. Now I've got too many stocks in my portfolio, so anything that I buy or add, it needs to have a really good return. This is why I'm using that high discount rate of 15. But I think there's a decent argument to say Alibaba is not unreasonable, 50% or so discounted from doubling in 5 years. From a fair price that represents doubling its value in 5 years. So that's my thoughts on the valuation. Now, this isn't a comment on any of the risks associated. This is purely my view of the valuation. Do your own research before you take any decisions yourself. Right, so there we have it. On screen now is my latest portfolio update on my £1 million investment challenge. Click there to see my progress.